Hello, viewers. How are you? This is my fifth chapter. Uh, we are going to discuss about the double entry, how to do the double entry, and what are the general rules for the double entry, and small examples also. We will try and see how we can do the pass the double entry. First of all, we can see what is the double entry. Double entry, every transaction has two effects, that is debit and credit. Okay, every transaction has two effects. Already I have discussed this matter in previous chapters, but here only we are going to look into this aspect deeply. Okay, every transaction has two effects, that is debit and credit. Accounts attempts to record both effects of a transaction or event on the entity's financial statements. Both effects has to be recorded. That means both effects means, that is debit and credit. Okay, both effects has effects of a transaction or event on the entity's financial statements. Okay, we have to record in both effects, not the single effect. Okay, every transaction has two effects in the sense, that is debit and credit. Okay, one is debit entry, another one is credit entry. That is, already we have seen the accounting concept, that is duality principle and dual aspect, called it is dual aspect. That means two effects, that has a two effects, debit and credit. Okay, both should tally. Okay, both should tally equal. The debit entry and the credit entry should be equal. It should not differ from debit to credit. The amount should not differ. Both entries has to be equal, right? So duality principle or dual aspect. Okay, and secondly we will see the general principles, general rules of debit entry. What are the general rules of the debit entry? Okay, that means debit entry represents the following. Okay, debit entry represents the following. Normally expenses are debit entry. Okay, an item of expenses is debit entry. Okay, an increase in the asset also is a debit entry, and decrease in liability is a debit entry. Okay, we will pass debit entries on. If there is an increase in asset, we will pass a debit entry. If there is a decrease in liability, we will pass a debit entry. For an expense item, we will pass a debit entry. For what other thing is, for what matters we pass the credit entry? You may think a credit entry represents the following. Okay, an increase in the liability, and if there is any increase in liability, we will pass a credit entry. Okay, if there is a decrease in assets, we will pass a credit entry. For an income item, we will pass a credit entry. For these three, here these three. Okay, normally three items, no, one, two, three, four items are there. For the four items, we have to discuss the debit and credit entries. Okay, if there is an asset, if you say asset, for an example, okay, asset, asset, okay, asset, if we are purchasing an asset, purchasing the asset for 5,000, right? We are, one is purchasing and we are selling thing an asset for 2,000. For an example, what are the entries you will pass? You have to see is, first of all, asset. Okay, asset in the sense purchasing the asset. What is the effect the purchasing will have on assets? Okay, whether it will increase the assets or decrease the asset. Purchasing in the sense we are purchasing and the goods are coming into the company, so there is an increase. Purchasing in the sense this is an increase. Okay, sorry, increase, increase. Okay, increase. If you are selling, if you are selling the asset in the sense you are disposing an asset, means asset is going out of the entity. Okay, if it is asset is going out of the entity, in the sense the asset amount is decreasing. Okay, so this will have a effect of decreasing. So now you have to go for the double entry guidelines or general rule. What is the general rule says? If the asset is purchased or if there is any increase in the assets, you have to pass a entry for debit for the asset. Okay, debit entry, debit entry, dr, we denote that debit as dr. Okay, so if there is an increase in asset, we will pass a debit entry D. Okay, if there is a decrease in assets, we will pass the credit entry, credit, because it is decreased. See, increase in asset, debit. Okay, decrease, decrease in asset, credit, credit entry. So here in the purchasing activity, for the assets we will pass a debit entry. In the selling activity, we will pass a credit entry for the asset. There is a double entry. I am not discussing the double entry at this stage. I want to explain you how the asset will be treated in the double entry for this particular transaction, purchasing transaction, in the selling transaction. Right? Okay. I am not discussing the double entry. Only single entry I am telling you, because if I tell the double entry, it will be the complication for you now at this stage. Okay, so for the asset increase, then debit, asset is decreased, then credit. Okay, and other thing is, one is asset. Okay, second item is liability, liability, liability. Okay, liability. These two items only will have debit and credit both entries. When the increase and decrease take place, that depends on that, we have to assign the debit and credit. For liability also same. Okay, when there is a increase, when it's a decrease, there will be a debit and credit. Other matters, revenue, sales, all are standard credit, credit balance. We have to credit it in a sales account, we have to credit it in the revenue account. Okay, for the expenses we have to debit it in our expense account, so there is no complication there. So here only small complication. If you understand the principle carefully, then it's okay, rest of the thing is easy for you, right? Under the liability, there's a debit and credit now. So we will say we are we say we are purchasing we are goods, credit purchasing. Okay, credit purchasing. Okay, credit purchasing. What is the effect it will have on liability? The credit purchasing is the liability. Then we have to say what is the effect credit purchasing will have on the liability. Okay, here it will, the liability will increase. Okay, goods are coming in, but liability, you had to pay for that, for the particular supplier. We will say the person who is selling item to us on credit or cash is called supplier, right? Then increase in liability. Okay, this is increasing, liability is increasing, liability increasing. Then we are settling, the purchases. Now we are settling the creditors, settling the you are purchasing on credit 5,000. Okay, we are settling by it by 2,000 rupees. Okay, 2,000. Okay, then this will have a decrease the liability. When you are paying, settling this credit amount, credit purchase amount, it will decrease the liability amount. Then there is a decrease. So when the liability is decreasing, you have to pass a debit entry. When you are settling, the liability settlement amount is have a effect of debit, because liability is decreasing here. In this case when you are purchasing on credit, liability is increasing. When you are settling that credit, liability is decreasing. When the liability is increasing, you have to pass a credit entry. When the liability is decreasing, you have to pass a double entry as a debit. Not debit entry you have to pass. Okay, and third, we have to see sales. Okay, sorry. Sales. Sales of 10,000. Okay, this will have a credit entry, because always sales and income accounts, all the income accounts will have a credit entry. Okay, then this will have a credit entry. Okay, expenses, you say salary expenses. This is revenue, sales is revenue. Okay, salary, salaries means expenses. Okay, of 5,000. Salaries will have always debit entry, I mean expenses always have a debit entry instead of our books in double entry system. Revenue always have a credit entry. Okay, revenue always have a credit entry. Expenses always will have a debit entry. Increase in the liability will have a debit entry. Decrease in liability have a debit entry. Increase in assets will have a debit entry. Decrease in assets will have a credit entry. Okay, that is the idea behind this. Okay, if you understand properly, it will be easy for you. In the next, we are going to see the double entry modern equation. Modern equation, that is, I have given at one glance, you can get an idea where debit has to go and where credit has to go, when the balance is there, when the increase take place, when the decrease places. Okay, balance, always the balance and the increase in this amount take place are the similar. Debit or credit will appear, right? There won't be any different. If here is a credit, if the balance is credit, increase also will be the credit. There won't be a debit. Okay, if the balance of the assets is debit, then increase also will have a debit entry only. There won't be any credit entry, so you don't need to bother about the balance. You had to think, or you had to bring it to your, take it into your brain that increase whatever the what you call the entry will have. For the increase for the particular transaction will have the same on the balance also, right? For the decreases only, it will have an opposite effect. Okay, so assets, when there is any increase in the assets, when increase in the assets, there will be a debit entry will be passed. And if there is a decrease in the assets, then credit entry will be passed. For the liabilities, opening balance will be the credit, and if the opening balance is the credit, then if there is a decrease increase in the liability, then credit entry should be passed. And if there is a decrease in the liability, then debit entry has to pass. Okay, equity, for the balance, if there is any balance, there is a credit credit entry has to pass. If there is any increase in the equity, credit entry has to pass. If there is a decrease in the equity, then debit entry has to be passed. For the revenue always will have a debit entry. Okay, if there is any increase in the revenue, then credit entry. If there is any decrease in the revenue, debit entry. Where it will happen, the revenue, how it happens, decrease in the revenue, how it will happen? If you make a sales, okay, if there is any return take place, then that is the decrease in the revenue. Then in such case, we will pass a debit entry. Okay, so revenue, if there's any increase in the revenue, you will have a credit entry. And for the balance, for the revenue balance also, you will have the credit entry. If there is any decrease in the revenue, you will have a debit entry. For the expenses, you will have always the debit entry. For the balance also, debit entry. If there is any decrease in the expenses, you have to pass a credit entry. If you pass the how the expenses will decrease. Okay, how it will decrease, you say, how it will decrease? This will increase. If there's any increase, if there is 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 any decrease, if it is decreased, if it is decreased, if it is decreased, if it is decreased. Okay, So how the expenses will, what is the circumstances where expenses will be reduced? If you say you have erroneously passed on expenses, I mean, uh, uh, the expenses belongs to the owner, you have charged to the expenses account in the business. Then how you will have, how you can remove that? You have to pass a credit entry for the expenses, then only it will decrease. Okay, in such situation it happens. So this will help you in future for doing the double entries. Okay, we'll see next section. We can see the questions as answers.